Good morning.
Good morning. How are you?
Great. How you doing, Tanisha?
I'm okay. I'm hanging in there.
How's the house and everything? How's everything with the tree?
I finally got it down $500 later, but I'm just the insurance people came out, so I'm just waiting to hear from them.
Yeah.
Nothing else I can do.
Yeah, I guess so.
Yeah, it's just terrible. I couldn't believe it. I thought the world was coming to an end when I walked out and see my yard like a big hole in the middle of the ground.
Yeah.
And it just missed
Was
my
it-
car. Just missed my car in the driveway, but I felt bad for the neighbors because it kind of hit. It didn't do too much damage. It just damaged their on top of the porch, the drain,
Okay.
and it snapped the porch handle in half. And my insurance said they're not paying for it because it's an act of God. It was an accident. It's not something that I did.
What?
Not their property. So I'm still waiting to see what they're gonna do about my fence.
Oh, goodness.
I might just get them a gift card or something from Lowe's just to, replace the drain.
Yeah.
Shouldn't cost that much.
Yeah. Oh,
They
yeah,
do
yeah.
their own handiwork. I just feel bad. They just bought that house like 3 or 4 months ago.
Oh, goodness.
So I'm kind of embarrassed, but it's not my
Yeah.
fault. I mean, I had no knowledge that the tree was going to fall.
There's nothing you could do about it. Yeah.
No,
If you knew it
no.
was going to fall, you would have taken care of it.
Yeah,
So,
of course. Just
oh, yeah,
hoping the
yeah.
other one don't fall, because if it does, it's just gonna fall onto the pool, and that's gonna be a bigger disaster.
Yeah. Yeah.
So,
What kind of tree was it?
a pine tree.
They're the
is
worst.
huge.
They have such shallow roots.
Yeah,
Any kind of strong wind, boom, right over. I've seen it.
yeah, and they're both pretty big. I'm like, who will plant this tree here? Who will put this tree here? So now the other one is much bigger. I did get an estimate. They're talking about $1,000 just to cut it down.
Yeah.
Like, oh my God. But I'm
Yeah.
hoping it doesn't fall. So it is what it is.
Yeah, no. Oh, well. Oy, oy, oy. Hang in there, right? That's all we can do.
Yeah.
Right. So we got some people showing up. Ready for more chapter 16? Come on in. Let's see. Oh, I'm gonna go get my glasses. I'll be right back. Good boy. Yeah. Good boy. All right. All right. Looks to be 10. Give everybody a second. I'll get myself set up here. Share my screen with you.
Professor Lori,
Yeah.
this is being recorded, yes?
Yes.
Excellent. Where do I find the recordings?
I put them in here. I'll show you. I put them right into Blackboard. Let me share my screen. Let me get Blackboard and I could share the screen with you. So in Blackboard, you're going to go into your section. There it is. And over here on the left-hand side, see where it says lectures?
Yep.
Click on that. And I have them all in here.
Awesome. Thank you.
You're very welcome.
I knew it was going to be that.
Now, let me see. I thought I saved some stuff from the other day. I hope I did. Let's see. Maybe not. Nope. Batting 1,000, Lori. Okay. Well, we're going to get back into talking about the statement of cash flow and wrap up the last section. So I'm going to put everybody on mute. Questions though, unmute yourself, make sure you ask. But we are now going to talk about the financing area. So let me stop sharing that. Make sure I'm on record. Yep. And open up a Word document. All right, there it is. And share that with you guys. And we're going to keep going. So our goal today is to finish up talking about the statement of cash flow. Maybe we'll even be able to do one big one all together. And then Wednesday, we're going to review our practice problem. And I'll get that. I'll remind you of what that is. And then we'll be done with chapter 16. And then you'll have, instead of having class on Friday, you'll be taking your tests on chapters 15 and 16. So we'll talk more about the test on Wednesday. Okay. Any questions right now? Cool. So back to the statement of cash flow. Just to remind ourselves, this is where we're reporting how cash changed for a period of time. And we do it by three major areas: operating activities, which focuses on our operations. So we focus on our income statement here and our current assets and liabilities. And we went over that once or twice already, the change of those items. Then we account for cash changes due to investing activities. So this is basically our long-term assets and short-term investments. So any changes in those due to cash, that affected cash, I should say. So whether we're buying more investments or selling them, we report the change where cash is affected in this area. We did that on Friday, a little bit last Wednesday. So today we're going to focus on financing activities. And here we're focused on the effects on cash due to changes in loans and bonds. So these are generally long-term liabilities. So whether the company's purchasing or paying off, because with the long-term liability, they're either going to be not purchasing, whether they are borrowing. So when they sell the bond or they borrow money from the bank, or whether they're paying off the bond or the loan. So the thing to remember with loans, notes payable, they could be short-term. So we account for the short-term loans down in the financing area. And then also changes in equity, stockholder equity accounts, that cash is affected. So I'm going to grab my book. Let's take a look at some of the common items, and then we're going to do a practice one. And I love this. I already told you guys about this back on page. There it is, page 570. So on page 570, they have a great graphic that shows operating, investing, and financing activities. So the financing activities, the common cash inflows. Why would cash increase for these activities? The company sells more stock. Remember, when they sell stock, they're collecting cash. That's an increase in their equity account where cash is affected. They resell treasury stock. Remember, a company can buy its own stock back. Well, when they resell that stock back into the market, cash will increase. They borrow short and long-term notes or bonds. And in the first, when we said they sell more stock, we're assuming it's a corporation. What if it's a sole proprietor or a partnership? So any Contributions from owners are increases in cash if they're giving cash into the company for a financing activity. Then we looked at the common types of outflows that would be accounted for in this area. Whenever the company pays a dividend in cash, when the company purchases treasury stock out of the market, whenever they pay off a long-term, short-term debt. And if it's not a corporation, if it's a sole proprietor or partnership, whenever the owner withdraws cash. So it's these kind of activities that are common for the financing activity. And you have to remember, what is financing? It's where the company gets its money from to exist. And that's basically from loans, bonds, and equity. So let's just jot those down just so we remember. So common inflows would be borrowing, on a loan or bond. So when the company's borrowing, selling stocks, whether they're common or preferred, for cash, and that's the key, cash has to be involved. Reselling treasury stock for cash, or that final one is contributions from owners. So if it's not a corporation, that's what we're focused on there. So there's not a lot, not a huge amount. We just need to figure out, do we have any of these things? Common outflows in this category then, as we said, are paying dividends, or if it's not a corporation, owner withdrawals. So you're not going to have both. It's going to be either or for that. The company paying off bonds or notes. So anytime they're paying on the principal, and that's the key, the principal is what would be a cash outflow in this area. The interest portion was already accounted for up in operations. Purchasing treasury stock would be another common outflow from a financing activity. So we don't have a huge amount because we don't have a huge amount of accounts here, but those are the common ones. Now, how do we figure out? We have to take the amount of this. We have to take that same three-step approach we did with determining investing activity cash flow. Use some T accounts, figure out how the accounts changed, what kind of major changes were there in the accounts, and did any of those transactions that changed the T accounts, did they affect cash? So we're going to just take a quick look in your book on, let's go to page, just to show you this, page 580, page 580, okay? And if you're looking at Genesis, that's where we're gonna go to. So kind of put your hand in the page for 580 and go back to page 574. So we've been working on Genesis as our example company. And we have shown you how to do their operating section, their investing section. So now we're going to focus on the financing. And on page 574, you can see on their balance sheet, they have long-term notes payable, and they went from a balance of $64,000 to $90,000. Now we just don't go, oh, they must have borrowed whatever, $26,000 more. That's why it changed. No, we don't know that for sure. The other things that changed, common stock increased by $15,000, and retained earnings, which is a part of equity, that increased by $24,000. So we know how the items changed. So I'm just going to stop sharing my Word and go into Excel. and do a quick T account, couple T accounts, and show you the 3-step process for the financing area. Like I said, it's very similar to the investing. Share screen. Come on. So I'm just going to create a T account and copy it. And then I'm going to do that 2 more times. So we have 3 T accounts. Whoops, I did that wrong. Sorry. That shouldn't be separated there. All right. Should look like that, not what I created there. Okay, now they're all good. So I'm going to start with notes payable. Now, again, the 3-step process, or if you wanted to do it, their 3-step process. I always say, okay, let's start with what I know. Let's start with the balances. I know notes payable started with a $64,000 credit balance, right? Because liability, it's on the credit side. And I know at the end of the year, it went up to 90,000. Now, so we need to determine, why did it increase? We need some additional information. Now you will be given another variable so that you can complete your analysis here. So over on the left-hand side, it tells us in B, the company purchased plant assets by issuing $60,000 of notes payable. So notes payable increased by $60,000 during the year. We didn't get cash, we bought equipment or plant asset, but that's why part of the increase occurred. So if there were no decreases at all during the year to notes payable, our current balance should be the 64,000 plus the 60,000. But it's not. So it should be 124,000. What is it at? 90. So it decreased by $34,000. So there needs to be a debit of $34,000. Why did it decrease? Okay. Because we paid off or retired notes. But go down to E. What does it say there? Paid $18,000 cash to retire notes with a book value of $34,000. So we didn't pay $34,000 in cash. We did decrease notes payable by $34,000, but we didn't pay $34,000 in cash. We only paid $18,000. So when I'm doing my financing area of I'm just focusing on the financing area of the statement of cash flows. So let's make sure I'm using the correct cash flows from financing activities. You'll see also on page 581, it says cash paid to retire or pay off notes. And it's not 34,000, it's 18,000. So we've accounted for why notes payable changed, and then look to see were any of the changes involving cash. Well, this one wasn't. This was just purchasing more equipment, has no impact on cash. Cash was not debited or credited. And that decrease, we only paid $18,000. Are there any questions on that? Okay. So let's go to common stock. So we've accounted for that change. So common stock, that T account goes from a balance of 80,000 up to 95,000. So as I said, we just don't go, oh, we must have sold and received $15,000 more in common stock. We would need more information. It tells us in D, the company received $15,000 cash from issuing 30,000 shares of common stock. So that does account for the increase. So we would have cash received from sale of stock positive 15,000. Common stock increased by 15,000 because we received cash of 15,000 on that sale. Are there any questions on that? Okay. The final equity account we need to determine why it changed is retained earnings. Now, retained earnings starts with a balance of 88,000 and ends at a balance of 112,000. Now, what you have to do here is remember and say, well, what increases retained earnings? Net income. So during the year, or at the end of the year, we increased retained earnings for the net income, which is 38,000. That's on my income statement. So if there was no other change to retained earnings, the balance in my retained earnings account should be 126,000. It's not, it's 112,000. A difference of $14,000. So at some point during the year, we decreased retained earnings 14,000. Part F of my additional information says, oh yeah, by the way, you declared and paid a cash dividend of 14,000. That's why retained earnings would change. So net income is not cash, remember. Okay, and we've already accounted for net income in our statement of cash flow. But what did impact cash from the change in retained earnings? The dividend payment. So cash dividends paid will decrease our cash flow from financing activity. So we've accounted for why each notes payable account changed, which part impacted cash, as well as our equity accounts. So we will net these three together. Overall, cash used, I want to say it like they do. Sometimes we have our own little spin on it. Yep, net cash used, sorry, that should be net. Net cash used in financing activities. And we say used because it's negative. If it was positive, we would say provided. Okay, are there any questions on that? Okay, so now if you go to page 581, you could see the whole enchilada there, right? We have our operating activities, the indirect method. Net cash provided by operating activities then is 20 grand. Net cash flows from investing activities amounted to 2 grand. And now our net cash used in financing activities, 17,000. Now net those three categories together, plus 20, plus 2, minus 17. So how did cash change overall for the year? It increased 5,000 from the beginning of the year to the end of the year. But the specifics above tell us why and how, where, operating activities or financing or investing. Now we've got to reconcile. So we add or subtract, in this case, we will add the net increase in cash to the beginning balance of cash on our balance sheet. And when we add that, the result we get should be the ending balance of cash on our balance sheet. And if you flip back to page 574, you can see that occurring. So that's what we're showing. Why that cash increase? Remember I said in the very beginning, we could see cash increase. Statement of cash flow tells us why, where, how. Gives a lot more information. Any questions?
Yes, sorry, I have a question.
Sure, go ahead, Penelope.
So I was a little bit confused to get the beginning balance. So
Okay,
how do we do that again?
okay. So let me take you to the book. Okay, just give me a second. I'm calling up the book on my, and I'll stop sharing this and you can see my screen. You can see Connect.
Yeah.
Okay. Get in the book. So if you go to page 574,
Okay.
all right. I just want to call it up in case anybody else is confused by that. We'll get it all straightened out. Ah, that's not what I wanted. Hold on, sorry.
It's okay.
I'm in the table of contents. I didn't realize that. Ay, ay, ay. Come on. There we go. Gotta find my picture. 574. I can't stand that they don't let you go right. I guess you could do a search and it would take you right to the page. Fool around with it. There we go. So whenever you want to know the beginning balance on your balance sheet, always go to the prior year's ending balance. So when you're looking at the long-term notes payable, its beginning balance for 2019 is last year's 2018's ending balance, which is right there, the 64,000. So this would be right on the balance sheet. Then this year's ending balance, of course, would be the 90,000. So that's where I got each of these beginning balances. Last year's ending balance. It's the same as this year's beginning balance. They are always the same number.
But my question was about to get the cash balance for the prior year in the statement of cash flows.
Right.
How do we calculate that? So you said that we add or subtract the net increase.
So, yeah, because you had an increase. So there's your beginning balance.
You add the 5,000 to the 12.
You got it.
Okay. Got it.
Cool. Anybody else, any questions? Okay, then here's what I'd like you to do. Take a few minutes. We're going to go back to that one we were working on, that the quick study 16-7. We did the operating section. This is on page 596. We did the component on page 597 for investing. If you go to QS 16-17, and I will stop sharing this, go back in my Word document. But if you go into that, bear with me a second, guys. There we go. So this is on page 597, QS 16-17. Finish up the financing area. See how you do it. That'll give you like 10 minutes. And if you have your statement of cash flow from the other day, now you can finish it off. Do your financing area, find out what you have overall by netting, operating with investing within financing, adding or subtracting that to your beginning balance, and see how you do. So we're on QS 16-17. I'm gonna put myself on mute, but I'll be here. If you have any questions, let me know.
Professor, can I ask a question? Are you there?
Yes, sure. Go ahead. I'm sorry. I can't hear you now.
Sorry, can you hear me now?
Yep.
Okay, sorry. To get the prior sales in from this one, would I just grab what it says in cash? I was listening, but I guess I didn't, I was slow.
Wait,
But like after I get my net increase, the way I have my statement of, I have it set up on my computer, but after I get my net increase, I have the prior year's balance.
Yep.
Would I still, could I get that from just this information as well?
Go over to page 596.
That's where I'm at.
Yep. On the, you see where it says cash?
So I would just grab the 94,800.
That'll be this year's balance. You want to, last year's balance is 24,000.
Okay, all right.
Hopefully it'll all work out.
Okay, thank you.
Give you guys a few more minutes. I'm just making a full statement of cash flow here. Okay, let me see what that was. Studies, 1613. A couple more seconds. May not jive out. So if your cash flow is a little off, just hang in there. I don't think it's going to work. These quick studies were not meant to be done in succession, unfortunately. So we'll just have the three major sections. Sorry about that. I thought they were. Let's check again. 70,800. Let's check. Yeah, no, 7,200.
It's off, right?
Yeah, it is. Sorry about that. You should have an increase, I think, of 115,800. But that's not what the cash is. They should have made it so that you can prove it out, but they didn't. Sorry about that. That's my fault. I just assumed they would do that. Well, let's take a few minutes now. Let's take a look and see what you came up with. So I'm going to share a Excel sheet again. And I'm just going to copy and paste the T accounts I already have created. We'll do it for this one, because I think we have all the same accounts. It says in our, it says, assume some stuff about common stock Then they want to know what the cash dividends are paid. And then they also want, we're going to start actually with number 2. It says, assume that no additional notes payable are issued in 2019. So we need that little piece of information, and it would be told to us. They're either going to tell us if we borrowed more money or if we paid off. And then we would have to figure out that other variable. So our notes payable start with the balance of 69,000 and end at a balance of 29,000. Now, there were no additional notes payable during the year. So we don't have any increases on the credit side. So the only effect on notes payable during the year would be decreasing it by 40,000. Now, if there was any other thing affecting notes payable, they would tell us. So the assumption here is that that $40,000 decrease was because we paid cash. Okay, so if we're doing the financing activities area, I know it doesn't ask us to do that, but if you did it, you would put cash paid on notes or loans and show it as a negative 40,000. So we've accounted for why notes payable changed and the effects of any of the changes on cash. Now go to common stock. It tells us that common stock went from a balance of 179,000 to a balance of 229,000. It goes on to say, assume that all common stock is issued for cash. So the only reason common stock would increase is from cash sales. So it increases $50,000. So the assumption here is, from this information, cash received on sale of stock is $50,000 positive. Are there any questions on that? The final item, retained earnings. Retained earnings goes from a balance of 8,400 to a balance of 35,600. Well, one reason, remember, retained earnings would increase is from this year's net income, which was 30,000. So if there was no dividends that would decrease retained earnings during the year, the current balance at the end of the year should be 38,400, these two added together. It's not. It's 35,600. It's lower. So take the difference, and there's your dividend payments that were made during the year, 2,800. And they said those dividend payments were made in cash. So cash paid, I should say dividends paid, or cash dividends paid 2,800, because that's the effect they have on cash. Are there any questions on that? So that's where we would find the dividends paid, by analyzing that retained earnings account. All right, let's take a look at the overall change then. D36 to D38, $7,200 positive. So net cash provided from financing activities would be $7,200.
It adds up.
When you go and, okay, that adds up. But when you net those three together, the operating, the financing, and the investing, it's going to be too much of a change. You follow me?
Yes.
Oh, wait.
Mine's adds up, unless my
Oh,
formulas are wrong.
Well,
so
I missed
I don't wanna-
something. All right, I missed something. I thought we just bought. So here, so we could take this information then. Let me see if I could do this without getting too squirrely. I'm going to share my a Word document with you. I was wrong. You should see the statement of cash flow so far. Yeah. It's not the prettiest. Okay, but let me just get it all in line. Okay, I forgot we had two activities here. In our investing activities from the other day, we not only received cash from the sale of furniture, but we paid cash
For equipment. Was it?
purchase of furniture, right? Which was $45,000. Forgot about that. I didn't save it from the other day. So if we take the difference here, then we have net. And this is a mess, isn't it? Okay. Net cash used in investing activities. And
19,600 negative.
19,600. Let me bring that up so it actually stays. There we go. So now, I know it's all different kind of stuff there, but you guys get the point. So now let's see if we have an overall increase or decrease in cash. And it looks like we have an increase in cash. We will take 83,200 from the positive cash flow from operating activities minus the negative cash flow from investing activities, plus the positive cash flow, from financing activities. And I get 70,800. Oh, I'm glad this worked out. So overall cash change during the year due to these three activities, $70,800. Now, cash beginning of the year was $24,000. Add those two together. Cash end of year, 94,800. Let's see if we're right. Look on your balance sheet. In the cash, under 2019, 94,800. So we're good. So you've completed a statement. Looking at each major section. And it works out for us. Any questions? So hooray for you. What do you guys think of the statement of cash flow? Silence.
Are we gonna have to do a full one on the test?
Yes, you will.
Oh, no, that is scary.
So now you will practice and practice and practice. The good news is we don't throw any snafus on you. It's going to be very similar to what we've been doing. And you're going to, I'm not naive. I know you guys are going to be using your book and stuff. So, got to make it a little challenging on the test. So we're not going to have time to go through a full one again. So keep practicing your exercises. And then have ready for, look what number I have you doing. Give you a page number. It'll be the B problem. And it will be 16-6B, which is on page 608. Oh, that's a nice one. Okay, so read through it. Don't forget about that additional information because it's going to help you with determining cash flow from investing activities and financing activities. Okay, and we will review that on Wednesday. Maybe we'll have time, we'll go through one more together I think we will. And then you'll be all set for your test on Friday.
What's the page again, Ms. Laurie?
Sure, it's 608, page 608.
And you say 16 dash
16-6B.
Oh, I have one more question.
Sure.
I was looking for the lecture from last Friday and I couldn't find it.
Let me double check. I might have thrown it out on YouTube, but forgot to put it into Blackboard. But it is saved. I'll just make sure I post it.
All right, thank you.
You're welcome. Anybody else?
I have a question. Is not really on, is on. How do I make like the one I just made for the statement of owner's equity? Because we in Excel class, but if you don't really use it to do it, you don't really understand a lot of times. How do I make that a template so I could reuse that? Do I just save it as a template so I could just change the wording in it?
Yeah.
Okay. All
And I'm
right.
glad you brought that up. Let's talk about Excel because you're going to have to do this is the only problem. Everything's Tableau,
Mm-hmm.
but in this chapter, it's an Excel project,
Okay.
a Tableau. Please read all the instructions. My online students are freaking out. Oh, I gotta use formulas. I did the whole thing and then I did it wrong. And they said, because they go, I didn't read the directions. So please read the directions. Everything's gonna be a formula in the spreadsheet. So just don't start going and creating a cash flow statement using numbers. And if you have any kind of questions, just let me know, but there's complete instructions on how to do it.
Okay. And thank you for what you did for me. I appreciate it.
You're very
sending
welcome.
it. I appreciate it. So you have a great day.
Thanks, you too. Anybody else, any questions? All right, guys, thank you. If you have anything before Wednesday, email me. If not, stay safe and I'll see you on Wednesday.
Have a good day, Professor Dunn.
You too, Kel.
Thanks.
I do have a question.
Oh, yep.
With
But
the
not-
12 one, I don't see the instructions.
Oh, okay, let me go in. Give me 1 second. Let's make sure I'm in the right class. I'm not. Okay. Let me see your view. I could show you it.
Okay.
All right. I'm getting there. Just hang in there with me, Natalie.
Okay.
Okay. I'm going to share the screen. Can't find it now. Hold on.
Okay.
Do you see it?
Okay.
It says all answers must be entered as a formula.
Uh-huh.
Okay. Now. Okay. So whenever yeah, I see what you're saying. There's no specific instructions with how you enter the formula.
Right, because like I did the first one right just because it was only the same number, but on the second one, like when I was doing the accounts receivable, when I
Mhm.
do the subtraction part, it says wrong. I'm like, no, wait, I'm doing so. I'm like,
Yes. So what you want to do is put plus D7,
okay.
the cell, minus, oh, I see what's going to happen, C7, but
Yeah, right.
that's what you did, right?
It has to be between parentheses,
Yes.
right? So how?
So
Right.
Yes. Here's how you get around that. You're gonna do it, even though you are subtracting, like, so what you wanna do is start with the, could you see my screen?
Yes.
Minus, okay? Then do, so outside your parenthesis, put a minus.
Okay.
Then put D7 minus C7.
At the beginning, do I have to put the equal sign?
Oh, it says I'm wrong.
I think at the beginning, you may have to put the equal sign.
Yeah, let me see. That shouldn't be happening. Let me see. D7 minus C7. Okay,
Okay.
that's what you do. Put an equal sign and then make it D7. You see my, up
Yeah.
my formula?
Maybe I did like backwards.
You did it backwards?
Yeah.
Okay. But
Okay.
yeah, subtract beginning of the year minus end of the year.
Okay. Got it.
Okay, and then it should automatically, if you have any other issues with it, let me know.
Okay. Thanks so
Okay,
much.
you're welcome.
Right.
Anybody else, anything? All right, guys, thanks.